Thank you. Hey James, how would you approach trading the British pound versus the US dollar? What a great question. Let's look into that. Hello there. This is James, and today I'm answering a really great question on probably one of my most favorite currency pairs, the pair I trade a lot, and a pair which is, quite close to my heart. But before we get into all of that, don't forget these little educational videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So today's question was, James, how would you approach trading the Great British Pound US dollar, also famously known as the cable? But before we get into the details and what I would look at, let's have a little bit of a history lesson on the British pound. The Great British Pound is one of the oldest currencies in existence, and the UK economy is the sixth biggest economy in the world, with London being a key financial sector, with London being a major player for the UK GDP. The British pound used to be the biggest reserve currency in the 19th century and the early part of the 20th century, but has since lost its title. However, behind the dollar, the euro and the yen, it is still the fourth biggest reserve currency. Now, the dollar and the sterling have a special relationship. They both floated in the 1970s and have a nickname, the cable, to do with the cable connecting New York and London under the Atlantic Ocean. So there we have it. There's a little bit of a history lesson on the Great British Pound and some of the key things to, be aware of when looking at the sterling against the US dollar. Now, like the euro dollar, okay, because obviously it's UK's the Great British Pound against the US dollar, you have to pay attention to fundamental analysis. What I mean by that, obviously, as you've known, and if you've watched this course so far, I'm talking about key economic indicators. So yes, you have to be aware of key economic indicators for the US dollar, like GDP, interest rate decisions, NFP, job gains. And the UK is the same, GDP, trade balance, interest rate decisions. But there is a couple of other things which is different sort of economic data you have to pay attention to when looking at the sterling than you do with the euro. For example, the UK, they have their version of initial jobless claims. You know what that is? That is when people, it's a number of people who've signed on that week, initially taking unemployment benefit. The UK's version of that is called the claimant count. And it's done the opposite way around, as it's a negative number. The higher the negative number, the better that data is. The lower the negative number, not so good. Whereas obviously the US initial claims, they do it as plus this, plus that. So you have to be aware of that. The other thing with the UK, which is for economic data-wise, you have to pay attention to, is when they do interest rate decisions by the Bank of England, they do something extra. They have what's known as the Monetary Policy Committee, okay, these are the people who decide on the interest rates in the UK, and there's 9 members, okay? Now, when they announce the UK interest rate decision, what the Bank of England is going to do, they also announce how the MPC members voted, and it's 3 categories, okay? Raise interest rates, lower interest rates, or keep interest rates the same. And they announced at the same time of the interest rate the number of people who voted in those categories. So though, for example, they say they keep interest rates the same, okay, and the market shouldn't really react, but instead the market pays attention to how many members voted for a hike or a decrease or keeping it the same. If there is a slowly steady growth in numbers of those voting for a hike, the market reacts as in going long, because they then expect, though they haven't voted for it this time, there's more members on the MPC committee, or the MPC, voting for a hike, meaning that they could raise interest rates in the future. So again, that's something you need to be aware of. You know, the UK economic data is done slightly differently. But still, it's still the same. GDP, job growth, CPI for the UK, these are all major things to be aware of compared to how the US is doing. As well as that, of course, you need to, like the euro, you need to be aware of market sentiment, okay? Because like the euro, the British pound, the sterling is a risk on currency, whereas the US dollar is a safe haven. So its market sentiment, okay, is bullish, okay, then, or as in risk on, the British pound may benefit against the US dollar. If the market is scared and is cautious, then of course they probably will favor the dollar as a safe haven. So you need to be aware of that as well. So risk on or risk off, same as the euro. Now, the other thing to bear in mind with the British pound US dollar, again, is like the euro, is trading times, trading hours. Okay, as we mentioned in the euro dollar video. You know, the Asian session, not so liquid. The London session, we already established that London is a key financial sector, is incredibly active. And then you have the crossover where London crosses over the US. Again, exactly the same as the euro. Okay. However, the sterling is a lot more volatile than the single currency, a lot more volatile than the euro. Okay. For example, the average monthly pip movement on the euro dollar, it can move between 600 to 900 pips. The British pound, on the other hand, the average monthly pip movement can range from 800 to 1,000 pips. So it's a lot more volatile than the euro dollar. The other thing to bear in mind is, again, just like the euro, is correlations. Okay, we said this in the euro dollar video. Yes, indeed, it is it's correlated with the euro, so it tends to follow in the same direction. It's positively correlated, so you need to be aware of that. And obviously, it's negatively correlated, again, like the euro against the dollar, Swiss franc, and things like that as well. So that, again, is something you need to bear in mind of when trading the British pound US dollar. There is something else which I touched on with the euro dollar video as well, but this particular pair, over the last, say, coming up to 8 years now, is heavily influenced by this, and that is politics. Let's have a look at that. In 2016, the UK had a referendum on EU membership, resulting in them leaving the EU. Since then, London and the UK has been in political turmoil, which means the UK economy and the Great British Pound has often been on a knife's edge. So politics has been a very heavy driver behind the direction over the last 8 years in particular with the British pound US dollar. And not only just the dollar, British pound against many currency pairs. The Brexit really caused shockwaves in not only in the political arena, but in the financial arena too. And when the Brexit happened, you saw the British pound lose a lot of strength against the dollar, the euro, across the board. Okay, so ever since the Brexit, it's heavily been dictated by politics. Okay, and it's can be a very key driving factor behind the direction of the cable, more than the euro dollar. Okay, this is why I say we do. I focus a lot on the politics in the UK, and I can give you several examples of how politics has influenced the direction of the British pound over the last 8 years. For example, again, we've already said the Brexit. When the Brexit happened, the vote came through. Shockwaves hit the market, and the sterling collapsed. In fact, the sterling actually then was a victim during the Asian session, which is usually pretty quiet, by a flash crash happening in the Asian session. Okay, so yeah, it's very, that caused a lot of weakness in the sterling. But then since then, we've had other things where they've tried to sort this mess out. For example, Liz Truss, not Liz Truss, sorry, I'm getting ahead of myself. That's another story. Theresa May, when she had called a general election, okay, the election result came in, it was a hung parliament. Boom, the sterling became under pressure. When Boris Johnson, for some strange reason, he won a landslide, that gave the British pound a bit of strength. Okay. At the same time, you've had over the last couple of years, other political situations. The most recent was 2022, when the shorter Prime Minister only for a month or so, Liz Truss, announced to the market, or announced to the world, that they were going to do serious tax cuts to boost the UK economy. When she announced this, and her then Chancellor announced these cuts, the sterling collapsed, and the Bank of England had to intervene on UK bonds. Okay, it was an absolute travesty, and the market knew this. Okay, the market knew that this political decision would greatly affect the economy in a bad way. So this is why the sterling softened. So that one political thing, that one political indication of tax cuts completely weakened the sterling. So this is why politics drives it massively. So you do need to pay attention to politics when it comes to the British pound. Certainly over the last 8 years. And it makes sense, because obviously if you have a change in government, that affects the change in monetary policy, which then the Bank of England may then enforce, which affects the strength of that currency. So yeah, unfortunately, the way the world is at the moment, the sterling in particular is heavily influenced by what is happening in UK politics. So that's something to pay attention to as well. Then we got obviously this technicals. Of course, that you can use technical analysis. Obviously, I use a lot of price action, like I do a lot of currency pairs, moving averages as well. But there's a couple of strategies which you can use for the Great British Pound US dollar. One strategy in particular is called the Big Ben, and I will be doing a new educational series later down the line where I will be focusing just on strategies, and one of that strategy in particular I will talk about. So in a nutshell, when it comes to looking at trading the Great British Pound US dollar, i.e. the cable, I look at these factors: fundamental analysis, economic data in the US compared to economic data in the UK. Market sentiment, is it risk on or risk off? Liquidity, the trading times. Am I going to trade it during London when it's busier and more active in the crossover? Or I'm going to trade it in a quieter session, Asia session. So I pay attention to the trading times as well. And I'm always aware, if I'm trading the euro dollar and I'm trading the sterling, I know the sterling is more likely to be more volatile. So then obviously I have to bring in my risk management involved in that pair as well. And obviously then correlations, again, same as the euro dollar. Is it positively correlated, negative correlated? So I have to pay attention to that. Then, of course, it is indeed politics, a lot of politics, certainly at the moment with the British pound, and of course a little bit of technical analysis. So those are the things I look for when I look to trade the British pound US dollar. Very similar to the euro, but I put more focus really on the extra economic data the UK releases, like the MPC vote, their version of the claimant count, the trade balance as well. I focus that a lot when I'm looking at the cable, a bit more than I do with the euro dollar, obviously. And I look a lot more towards politics when I'm trading the sterling. So there we have it. That's what I look for in trading the cable. I hope you found this little video interesting and helpful. But remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I do suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.